Live, local, late breaking. You're watching KOLT News 13 live at 6.
An unusual move by the U.S. Supreme Court leaves Arizona on the losing end of a fight over immigration.
A former University of Arizona football player is back in Arizona to face a murder charge.
But first, Wall Street rallies as the Federal Reserve raises interest rates again to try to slow inflation, but the effects on your finances could be short-term pain for long-term gain. Good evening, I'm Dan Mari.
And I'm Brooke Wagner. Today's 0.75% rate bump is the biggest in almost 30 years. It comes after May inflation hit a 4-decade high.
KOLD News 13's Bud Foster shows us how the rising cost of borrowing money could end up helping home buyers blocked by record high real estate prices.
It's really a little bit of a catch-22. You want to try to have some inflation, but not too much.
It's that too much which consumers are faced with right now at the grocery store and at the gas station, and turning that around is the goal. The housing market, which has already seen a boost in interest rates, is leading the way.
The email came in today from the first builder that said, look, we've lowered our base prices on all our new builds. Come check them out today.
With interest rates rising the fastest in nearly 30 years to combat runaway inflation, something many consumers have never faced before, it's likely the first thing that consumer needs to do is check the wallet. See how many 22% credit cards are in there, and then take action there first.
For anybody that has balances on credit cards, I think that you really want to consider trying to pay those off as best you can. And really don't pay interest on credit cards because the interest rate's only going to get higher on those.
While rising rates cause pain to some, they can actually ease pain for others. In the housing industry, rising mortgage rates will actually bring stability to an industry which has been unstable for years.
We're already seeing some price reductions. After a week or two, they're realizing they're chasing the market down instead of climbing. And so, yeah, we're going to see a more healthy real estate market in the future.
Which is what the feds hope will happen to groceries and to gas as high prices tamp down demand and higher interest rates curtail big ticket items. But that may take a bit longer.
I don't think it's going to happen really quickly with the grocery stores. It is a little bit more of a supply issue there, but that should start to hopefully open up in the fourth quarter as well.
If the Fed's rate hikes work out as planned, the hope is to cut inflation in half or more by the end of the year. But that's still a big if.
They're trying to get a curb on, not going into recession, not going into hyperinflation. And, we'll have to see if it was the right move as far as that goes. There's still a lot of headwinds, but I think that, it was a good move by the Fed.
Maybe the only move it had right now, with more hikes to come. I'm Bud Foster, KOLD News 13.